In today's video, we're going to unlock the secrets of turning $5,000 into $25,000 in your option trading account. I'm excited to share with you these two proven strategies that I've used and other option traders have used to multiply their profits. Before we dive in, let me be clear. I'm not talking about doing this in your retirement account. I'm talking about growing an option trading account like a business and growing it aggressively and safely. In this video, we're going to cover the option strategies that can amplify your gains, how to manage and reduce risk on these trades, and we will cover live option trades on the option trading platform. So whether you're a beginner and learning options or an experienced trader looking to level up, this video is for you. Guys, before we get started, be sure and hit the like and subscribe buttons down below. Also download the free options workshop in the link below. It talks about the two main benefits of trading options over buying stocks. The goal of this video is to show how to grow an options trading account from, say, about $5,000 up to $25,000. And the best way to do this is to utilize options because they provide leverage, and we want to use the most risk-averse strategies as well. So there's two strategies that I'm going to focus on. And the first one is the LEAPS option strategy, which is one of my favorites. LEAPS stands for Long-Term Equity Anticipation Securities. And what they are options that have an extended time frame. So they expire out past a year and even up to 2 years. And this extended time frame is what makes them so potent. Why can LEAPS amplify your returns? Leverage. With LEAPS, you can control 100 shares of stock for a fraction of the cost of owning those shares outright. This means your potential returns are magnified compared to simply buying the stock. And it's defined risk. Your max loss is limited to the premium that you pay for the option. So this lowers your risk. Time is also on your side. So unlike short-term, weekly, or monthly options that rapidly lose value, these options are not affected by the time decay in the early stages. This gives you more time for your stock price to move up and make profit. And LEAPS are flexible. You can use LEAPS as a stock substitute, allowing you to participate in the upside potential without tying up much capital at all. All right, guys, the first stock that we're going to talk about is SoFi. Ticker symbol SOFI. And here's an article by the Motley Fool, Adam Spataco, and it's talking about Cathie Wood buying this right now and saying it's got a 36% upside. I think it's got a huge upside. And SoFi it's a banking stock, although it's online. There's no brick and mortar store. So they've joined its cohorts above and is emerging as a star in digital banking. Unlike Wells Fargo and other large banks, it does not have brick and mortar. Instead, the company offers services such as loans, insurance, banking, and investing, all online through its app. And for the last 3 months ended September 30th, SoFi boasted 9.4 million members on its platform, an increase of 35% year over year, and its members use more than 13.6 million different products. So it's not just banking like the traditional banks. It's an investment company as well. SoFi is the company that's quietly building a one-stop shop for financial needs. And during the last quarter, they increased revenue 30% year over year. So they are killing it. It was able to do that by generating growth from non-lending products, so many different products. And as the Fed continues to reduce rates, SoFi's lending business will further accelerate. That's going to allow them to have more loans and collect more revenue. So SoFi is more of a tech-enabled service than a bank stock. So when you compare the PEs with SoFi, the price to earnings is higher, but it's more of a tech stock. It's a tech play versus a bank. So it's got the benefits of both a bank and tech. So this is why SoFi should be valued using a sum of the parts methodology. So taking everything into account. So with that, let's jump on the option trading platform. This is Tasty Trade. There's a link down below to Tasty Trade as well as Moomoo. I utilize both, and there's benefits if you go through my link down below. So open up an account and let me know. And I love both platforms. So with a SoFi, we're going to punch SoFi, SOFI, right up here, the ticker, where this little hourglass is. And then we're going to make sure we're on the trade page here. And we're going to look out more than a year, which is what leaps are. They're options that with an extended time frame. So we're going to look at January 16th, 2016. These are the regular options that expire on the third Friday of the month and most traded. So they've got the highest volume. So we're going to open that January 16th, 2026, and we're going to click on the buy. We've got calls on the left and puts on the right. We want the call because we want it to go up and we're buying. We're going to look at buying this for $755. So the stock is trading at 1104. So if we were to buy 100 shares, that's going to be $11 times 100 shares. So it's $1,104. But we're going to, actually we could do the 5 right here. We can, for 7, we click on the buy, the ask on the 5 strike option, and we pay $7. We actually are going to pay the mid price $6.80 right here. And all we do from here is hit review and send and place the trade. But I do want to show you, if we go to the curve mode here, this is the beauty of Leaps options. Just like owning the stock outright, as the stock price increases, your profit goes way up. So it's at 11 now. It could easily go to 20. If it went to 20 right here, you would basically make, you look at the profit and loss at expiration, $820, 800 bucks on a $680 investment. That's a 100% return, and it could easily do that. I think SoFi in the next 6 months is going to be above 20. They've hit earnings every time. So Leaps options are what I'm utilizing for SoFi going forward. So from here, you just hit review and send and place the trade. One more thing I wanted to show you real quick is on SoFi. I've got it on in this particular account, and you can see I'm up just in the last 30 days, just utilizing the Leaps options strategy. I've got several of them on, actually 10 right now, but you can see we've made $2,000 just in the last 30 days on the move up in SoFi. And you can see there was quite a big move up, but I expect it to continue up. Now listen up, because put credit spreads can also be a powerful strategy used to amplify the gains in your portfolio. Why are put credit spreads so powerful? Instant income. Unlike buying options, you receive money up front. This credit is yours to keep if the trade goes against you. And they're defined risk. Your max loss is capped. This allows you to take a calculated risk without the fear of blowing up your account. You're also utilizing leverage and can control more shares with less capital. It's very high probability, and when properly set up, these trades have a high likelihood of success or a high probability of profit. And they're very flexible. You can adjust your risk and reward by choosing different strike prices. Now, AMD is another stock that I want to show you the put credit spreads that I've been placing and how to put those on. Now, AMD is trading at 141. You can see it's had a bit of a move down. The 52-week range is 110 to 227. So just like the Leaps, you want to pick something that probably is down a little bit, but expected to move up. And the 1-year target they have on Yahoo Finance is 185, trading at 141 now. My target's closer to 200. I think AMD is just a magnificent stock moving forward. Earnings whispers. You can see the earnings just came out. They reported 97 cents per share on revenue of $6.82 billion. They beat expectations both on the top and the bottom line. However, AMD's data center segment was the driving force behind the growth. It achieved 122% increase to $3.5 billion. However, the gaming revenue experienced a steep decline of 69%. to 462 million. So I expect that to pick up, but that is really probably the reason for the drop. So with that, I took that as an opportunity, and you can see that drop. I've got several on in AMD put credit spreads, but this is one of the best trades right now. Let's look for selling options. I look closest to 45 days to expiration. So we're going to look at the 48-day December 20th, 2024. There's no earnings in AMD coming anytime soon because they just reported. So that's nice. And the IVR is still pretty high. So let's look at placing, we could do the 135, 125, and collect $2.90. So almost $3, almost a third the width of the strike. We could do the 140 if we feel a little bit more aggressive. We're at 141 right now. 140, we collect 377, and I'm comfortable doing that because the stock is down, and we're right around that 200-day moving average. I expect it to spike up, especially as we have upcoming interest rate cuts. So 377 is what we collect, and it's $10 wide. So the max loss is $623. That's the $1,000 minus the $377 that we would collect. And we put this trade on by clicking, actually, let me delete this and start again. So we're going to sell a put credit spread. So we're going to click on the bid. Puts are on the right, calls are on the left. We're going to click on the bid to sell the 140 strike, and the ask to buy the 130. That gives us $377 in credit that will be instantly deposited into our account. Our max loss is $1,000 minus 377, $623. Now we hit review and send and place the trade. We go to the curve mode. You can see that we are profitable all the way down to this break even of, where is this? This is 136, and we're at 141 right now. So we can even move down to 140 and still keep this $377 at expiration. This is the max profit, 377. We hit review and send and place the trade. And the financials on AMD are incredible. Look at the revenue and the income on the income statement increasing, and the balance sheet assets versus liabilities are great as well. And love the chart, everything about AMD. And what we do is after we hit review and send and place that trade, we wait. Once we get down to that 10 days, or we can let it expire and keep it all, but we can also roll to the next month and collect monthly income every single month. Again, want to show you real quickly, just in my option trading account, AMD put credit spreads. I've been doing them month after month, and you can see just in the last 30 days, I've got a couple of them on, and we've made $934. So it has been very successful for me going forward, and I think where it's priced right now, it's going to do great moving ahead as well. The real power with put credit spreads comes from repeating the process month after month. We're managing risk with high probability trades and a high probability of success. We also want to reduce risk by watching our position size. If we keep our spreads at $10 wide, we risk no more than the width of the spread, which is $1,000 minus the premium collected. So if you collect 300, you're only risking 700. And in a small account, then you can put on several different trades. You can have 5 or more. And I do recommend that you utilize different sectors so that it's diversified. And if one sector takes a hit, it doesn't put you out of the game. And there you have it, folks. 2 powerful option trading strategies that can help you to turn $5,000 into $25,000 fairly quickly. Leaps options allow you to utilize leverage to maximize your profits, and put credit spreads, on the other hand, allow you to collect monthly income month after month to grow your account. All right, remember to download the free options workshop in the link below. Hit like and subscribe. Be notified of the next videos coming out, and leave a comment, ask a question. I answer everyone. Thanks for watching. I'll see you in the next video.